What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on BABA ticker. And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that might drive the price of this company. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So first of all guys, let's start with the price chart. I made my previous video right here at this point and I've told you that in order to have more bullish signs we have to form higher lows and higher highs. And as you can see right here, we had the lowest point at that moment, but for now we have a sideways movement that is slightly lower, in general slightly lower than we had previous price action. And we have several percent movements to the upside, several percent to the downside. And this sideways movement doesn't show us anything, and the only positive sign is right here, the increase in volume. So, I will show you what should we expect from the price in just several minutes, and for now let's continue with the fundamental news. So, I don't want to dive deep into the company profile. We all know what is this company about. I just want to pay attention again on PE ratio, and it is lower than 17.5 points, and it is the lowest PE ratio among all of these type of e-commerce companies with a huge total market cap on the market right now. And I have to say that without the bearish pressure from Chinese Communist Party on the listing of Chinese companies, we won't see these low prices of these companies on the market right now. And that's why we have a very good opportunity, and this opportunity is very risky, I have to say. So, and let me show you the latest news. On December 15th we have this article that is titled "Alibaba leads Chinese stock losses as delisting concerns heat up." And let me quote you these bullets. Alibaba shares fell 6% Wednesday, and several of the leading Chinese tech companies were also in red following the latest speculation regarding the possibility that Beijing may force its companies to delist from US stock markets. According to a report from CNBC, asset manager David Levinger of TCW Group said that increasing tensions between the United States and China are reaching such a point that he believes that most Chinese companies will be gone from the New York Stock Exchange and other American stock markets by 2024. Among the issues that may sway Chinese decision is a new Securities and Exchange Commission effort that would let it ban foreign companies listed in the United States from trading their shares if those companies' auditors fail to abide by American regulators' information requests. I think for a lot of Chinese companies listed in US markets, it's essentially game over, Levinger told CNBC on Wednesday. This is an issue that's been hanging out there for 20 years. We haven't been able to solve it. And I have to say that it is still a lot of time to delist these companies if this delisting will take place. And as you can see, we have at least 2 years to this date, and that's why it is a lot of room to trade or even to invest in this company. So, and let me show you that this company by itself is still doing their job. And let me show you that on December 14th, right before the previous news, they posted this: "Why did Alibaba shares rise almost 4% today?" And let me quote you this. Alibaba shares rose almost 4% Tuesday following a report that the Chinese e-commerce giant is preparing to make a move that involves gaming in the metaverse. According to the South China Morning Post, Alibaba has registered a new company in Beijing that will test the metaverse potential for gaming software and services. And I have to say that this industry, I mean metaverse, and I think it will be one of the major industries on the market in the next several decades. And Alibaba is also trying to enter this field in order to have their market share. And it is a very good sign. So, and all in all, this company fundamentally and financially is very stable. The only concern is the delisting. And let me show you this news that was published on December 13th on CNBC.com, and that is titled, "Here are the 10 US listed Chinese stocks with the greatest American ownership, and Alibaba's not one of them." And let me quote you these bullets first of all. Rising political pressure from both Beijing and Washington means more Chinese companies may need to delist from the US and move to Hong Kong. But most of the affected stocks have low levels of US ownership, according to a Morgan Stanley report published December the 9th. Those with a higher share of American ownership don't include well-known names like Alibaba, according to the report. And let me show you that top 10 US-listed Chinese stocks by percentage of US ownership is here. And it is Beijing, Yum China, Zilab, GOYY, Hello Group, Tripcom, and only in the 8th place is quite familiar to the broader audience. It is TAL Education. And the 10th place is Baidu Company. And as you can see, the median share of US ownership for the top 10 names is 43%. And for the top 50 names is 27%. So as you can see, we have a lot of companies that are listed on the US stock exchanges, but not all of them are well known among the broader audience. So, and before we dive deep into the technical analysis, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, we don't have much information from the technical standpoint because we don't have major pivot points. For now we have the lowest pivot point right here, and we have to break these resistances in order to establish higher highs. For now we have higher lows, and let me show you that from our lowest point, if I pull the Fibonacci retracement tool to this range, and as you can see, we are hovering right above the 0.5 Fibonacci retracement level, and technically it is a rather good level to enter the position. But in this case, I don't think that this position might be useful for you, at least for now, because we don't have much confirmation. So, and let me show you the weekly time frame, and let me show you the indicators. As you can see right here, we're still forming the triple bullish divergence, and the bullish divergence is when you can see higher lows on RSI with the lower lows on the price action. And let me show you that right here. Let me clean the chart a little bit. We have consistently lower lows on the price action and consistently higher highs on the RSI. This means we have to have a retracement, and we have to have at least a good bounce to the upside, and this bounce should be massive because of the total bearishness for the last several months of this price action. And that's why if you enter your position, a long-term position for at least 5 to 10 months, you will be able to catch this bounce, and you will have massive potential profits in a matter of several months. So I don't encourage you to enter your short-term position because we are not out of the woods, and we can see even lower price action with the restrictions from Chinese Communist Party or from Washington. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!